Ladies and gentlemen, it has officially begun. The world's biggest hedge funds are halting all home purchases immediately. They know what's coming. We have just got new data that shows that house prices are dropping for their first time in years. We've also got more data to show this is some of the biggest drops since the 2008 housing market crash. Interest rates are now over 3% higher since 2020. And they've been rising so rapidly, the housing market hasn't had time to adjust to these new prices. But guess what? There is going to be a great reset in house prices. Simply, these interest rates are going to be so astronomically high. House prices have been so overvalued. House prices are so unaffordable. Americans are going to boycott the housing market. They're not going to take these crazy house prices anymore. Hedge funds know this. Hedge funds are stopping all home purchases. I have the news, facts, and data, and people buckle up because we've all seen this movie before. We know how it ends, and people, this is not me exaggerating. This is going to be one of the most epic global housing market crashes in history, not just the US. Since 2020, we have seen global house prices completely get into one of the most craziest bubbles we've ever seen because of cheap debt, all the money printing, and low interest rates. Well, guess what? Because the market's got all that stimulus, now it's all being taken away. This stimulus made house prices go up, and this stimulus being taken away is going to make house prices fall. It is only a matter of time, but guess what? The beginning of the end has started and is starting right now. Okay, everyone, let's dive into the news, the facts, and the data that shows what is happening. Well, holy smokes, everyone. Look at this. Blackstone single-family landlord to halt home purchases in 38 cities. And they announced they're going to be halting more home purchases in more cities in the months ahead. So I don't know if you remember hedge funds like Blackstone, they're going out and buying entire neighborhoods in 2020. This is another reason why we saw house prices inflate absolutely out of control. And the reason they're doing this is because they're given cheap debt. They're given loans of around 1%. So of course they're given free money. They know there's going to be huge inflation. So they thought, okay, let's go and use this money to buy real hard tangible assets. We're not just going to leave this worthless fiat currency in the bank account. And they know that inflation is going to erode away the debt. And that's why all these hedge funds went on this buying spree. And this has created a cost of living crisis. And so now the Federal Reserve, the US central bank, has come under huge pressure because of this cost of living crisis, because of the crazy unaffordability in the housing market. So the central bank is responding by hiking interest rates rapidly, their fastest pace in decades. And guess what? All this cheap money that these hedge funds got, it's all being taken away. So now they don't have the cheap money. They know house prices are going to fall. They know Americans aren't going to be able to afford it. So they're going to be waiting on the sidelines, waiting for house prices to crash. And then they're going to pounce. And they're going to buy homes for pennies on the dollar, just like what they did in 2009, 10, and 11. Remember, the housing market crashed and nobody wanted to buy real estate. But then these hedge funds came in and they waited. They were patient, even though, many people want the housing market to crash within a week, a month. They want the 50% crash now. You have to be patient, people. In a couple of years, houses are going to be much, much cheaper. So the company acquired Blackstone in June 2021 for $6 billion, told customers that as of September 1, it is pausing applications and property submissions in Boise, Idaho, Fresno, California, Memphis, Tennessee, and 25 other areas. And it'll go on hiatus in an additional 10 cities on October 1. And guess what? I bet you by the end of the year, when mortgage rates are 6-7%, they're not going to be buying homes anywhere anymore. We've assessed several factors such as home price appreciation, state and local regulations, and market demand to guide our investment plans and to best serve consumers. These billionaire hedge funds are such nice guys. No, people, what did they say the first thing? Home price appreciation. That is the biggest reason why they're stopping. They know house prices are falling, and I'll get into a moment. We've just got some new data that show we have seen the first house price declines in years. So they know there's no more appreciation going. They know their shareholders are going to go nuts if they even dare buy homes. And like they said, local regulation, I think they know there's going to be some government intervention because people are getting very, very angry at these hedge funds pricing them out of their hometowns and their home cities. And they go on to say, we hope to resume purchasing homes in these markets in the future. Well, that's pretty vague. In the future. When? In 6 months? In a year? No, people. Like I said, I think they're going to wait a couple of years to start buying homes again when they're selling for pennies on the dollar. So I know what you're thinking, oh, we've heard this housing market crash, doom and gloom for years now. House prices are never going to fall. Show me the data. Show me the facts. Show me the money. Well, you want the truth? You can't handle the truth. Look at this. Home prices fell for the first time in 3 years last month. And guess what? It was the biggest decline since 2011. That's right, people. This is not speculation anymore. This is not me trying to fearmonger. It is happening before our eyes. And it was completely obvious to see. Anyone that understands mathematics, anyone that understands economics, how markets work, it is simple. If interest rates go up, people can't borrow as much money and house prices have to correct to these high interest rates because most people don't go out there and pay cash for these homes. Most people use debt, and debt hasn't been more expensive in decades. So further price corrections are likely on the horizon as we move into what are typically more neutral seasonal months for the housing market, said Black Knight executives. And that's exactly right, people. What was the excuse in 2020 and 2021 why the housing market would never fall? They're saying inventory is so low. Well, now we're starting to see inventory skyrocket as we have sellers having FOMO or fear of not getting out and fear of not selling their houses at the top. And we're seeing literally every week asking prices are being slashed by tens of thousands of dollars. So these sellers, for every week they try to wait to get their house for a good selling price, well, it might be better to cut their losses and try to get out early before they start to see house prices in their area fall by hundreds of thousands. And listen to these shocking stats that show this housing market is more overvalued than it was in 2008. Now housing affordability is at its lowest level in 30 years. It requires 32.7% of the median household income to purchase the average home using a 20% down payment on a 30-year fixed rate mortgage, according to Black Knight. That is about 13 percentage points more than it did entering the pandemic and significantly more than both the years before and after the Great Recession. Are you starting to get the picture, people? Things are worse than 2008. And we have to have a correction. And the billionaires, the 1%, they know this is coming and they're preparing for it. So you're probably wondering, okay, what are the markets that are going to be hit the hardest? What areas should we avoid? And what could be the first markets to start to recover? Well, some local markets are seeing even steeper declines over the last few months. San Jose, California saw the largest, with home prices down now 10% in recent months. That's right, people, down 10% in just a few months. What do you think will happen over a couple years? And this is what you need to remember. This is only the beginning. The Federal Reserve is only beginning to lift interest rates. And it's not like before when they lifted them, 0.25% or 25 basis points every month, and they went from, 0 to 3% over a couple years. They are raising interest rates rapidly, the fastest pace they have in decades. So the housing market hasn't had time to adjust to these higher mortgage rates, but they will have to adjust. The markets have fundamentals, and fundamentally, they have to adjust to these higher mortgage rates. But again, they're lifting interest rates so fast, we haven't got the data. So you wait to see what's going to happen to house prices over 6 months. They're going to decline, and they're going to decline rapidly. In a moment, I'll show you how much they're going to have to correct with these high interest rates. So this was followed by Seattle down 7.7%, San Francisco down 7.4%, San Diego 5.6%, and Los Angeles down 4.3%. And I just want to reiterate, the housing market in the US isn't just one housing market. Every single city is going to perform differently during this housing market crash. Even in the city, there is sub-markets, some parts of town are better than other parts of towns, so everything will perform differently. So you may be watching this and thinking, house prices are still booming in my area, or you may be in another area and saying, yep, it is actually happening, house prices are down 20%. So wherever you live, you have to study your local market to figure out what is going to happen, because these are just the averages. So okay, how much a house price is going to have to correct to come back down to their real market value? Well, let's just do a simple calculation. Now look at this chart, people. This is the average 30-year fixed rate mortgage. Now we can see here in 2021, they hit a low of 2.65%. And this is why we saw house prices absolutely skyrocket, because there was such cheap debt. But this cheap debt is gone, and mortgage rates are now more than double that. We're seeing mortgage rates hit 6% in many instances. Let's say this, an average mortgage of say $400,000. Back in 2021, you could get an interest rate of 2.65% over 30 years. What would the repayment be? $1,612 a month. But this is where things get absolutely crazy. What would your repayment be now with a 6% interest rate mortgage? Well, again, the same $400,000 mortgage, now at 6% interest, guess how much more it's going to cost you? It's going to cost you nearly $800 more per month at $2,398 a month. So there's a lot of families that simply can't find another $800 per month. So let's do another example here. If people can only afford that $600 a month repayment, how much are they going to be able to borrow now compared to 2021? Well, that's right. Now with interest rates at 6%, they're only going to be able to afford $270,000 to still have that $1,600 monthly repayment. That is more than a 30% drop in their purchasing power to get the same home. And guess what? Mortgage rates are still going up rapidly. The Federal Reserve has came out, and this is why the stock market has been crashing over the past few days. And they said they're going to have to keep on lifting interest rates. They're going to have to keep on getting more aggressive. I think the Federal Reserve is going to have to lift the federal funds rate to 5%, so we could easily see mortgage rates at say 7 or 8%. This means home buyers are going to have their purchasing power dropped by at least 40%. So guess what? We're going to have to see a big housing correction. So I think house prices minimum could drop if these interest rates hold by at least 20 or 30%. And if inflation gets out of control, the Federal Reserve has to keep lifting interest rates. If we see this recession turn into a depression, it is not unlikely that we'll see another housing crash like 2008. So for those of you that thought you'll never be able to afford a home, be patient. Your time will come. Find ways to start a side hustle. Find a way to get a better job and start saving, because there is going to be lots of deals coming. For investors, there's going to be better deals coming. I would not be buying now at all. This is just me not telling you what to do. I'm simply not going to be buying real estate. And if I was thinking of selling within now the next year, I'd be selling sooner rather than later. Because every month I don't sell, I'm going to be getting a lower and lower offer. What do you think about this? What are you seeing in your local area? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.